Thank you for clicking this video. My name is Joel Ahmed and welcome to my YouTube channel. Guys, here I discuss about forex trading and most importantly, how not to lose money in this forex market. So without wasting any time, let's get started. Before discussing anything about the technicals, let me go to the fundamentals first because on the previous week, Wednesday, okay, in late night, Indian Standard Time, we had Mr. Powell's speech, and definitely, if you listen to the speech, it's not for it's not for those, but those who haven't listened to the speech, he clearly mentioned that he will be increasing the interest rate depending on the upcoming datas. You're looking at to the PPI, CPI, or maybe NFP. Okay, if it is inflationary, definitely they're gonna increase the interest rate one more time in this year. Okay, already this time they have increased 25 bps, and I think the next time again they're going to increase another 25 bps till the end of this year if the data are inflationary. So he clearly mentioned that everything depends on the data. So with that, let's move to the economic calendar. We have what news we have coming up for USD. You can see on Monday we don't have any important news as such, and on Tuesday we have ISM manufacturing PMI. On Wednesday, we have ADP employment change. And on Thursday, we have ISM services PMI along with continuing jobless claim. Sorry, initial jobless claim, as well as we have continuing jobless claim. We have factory orders. Okay, ISM services employment index. We have a lot of news bunched up together for the next week. And the most important on all of this, top of all of this, is the NFP, which will be a superior leading indicator for the inflation in the US job market. And we have average hourly earnings on the Friday as well. These other data will focus on the job market as well as on the manufacturing side, and how the inflation is. So next week gonna be very super important for us to focus mainly on the fundamentals. One thing I would suggest to you guys, if you don't know how to read data, okay, if you're not a fundamental trader, I would suggest you stay out of this market when some data is being released. At least to 15 to 30 minutes, uh, let the market be stable and let it swallow the data. Let it make let it make change according to it. Then only look for some technical levels, okay, and enter trade news, but don't enter while the news, if you are not a fundamental trader. According to me, I believe that fundamentals and technicals do play equal role. Okay, uh, there might be those some traders who don't believe in fundamentals. They say that technical is the only thing, but let me remind you one thing, that fundamentals drive the market. It gives the direction of the market where it will go, and the technicals are used to get a sniper entry, a good entry with a less stop loss, and so on and so forth. Okay, so that we have noticed that we have very important news coming up, and I think this week I'll be coming live. And with that, I want to say sorry because last week I haven't posted any weekly analysis video on YouTube regarding gold, but definitely I have shared it on my Telegram, and I have shared the levels for the selling, and definitely whosoever have trusted it, I think they have booked more than 200 on to 250 pips. That sell from 1980 as well as the sell from 1970. From 1970 we got almost 90 to 95 pips. From 1980 to 85 zone we got almost 150 pips. That was massive. That's enough for the fundamentals. Let's quickly jump to the chart of gold. We have here, I have 4-hour chart on gold. Okay, and yeah, I have drawn this level for you guys, cut this video short, and here you can see that in 4-hour time frame I have marked this zone, which is a very good key level, as because it made it a very good support. 1 2 3 4 5 6 broke, but immediately it broke in again, and the seventh time it broke it. Okay, and again it acted as a very good resistance. Now the market broke this resistance since 1950 or 1915. Okay, broke this resistance. Market hasn't come to test it yet. Okay, so this is a very good level, as well as we can see a supply area over here in 4-hour time frame. Okay, we have two confluences, and first of all we'll mark our supply and demand area. So this is the demand area marking. Okay, this will be a very good demand area from here. Sorry, I think I mispronounced it as supply area, but this is the demand area. You can see in 4-hour time frame, and I'll draw a fib from here. I'll show you something very interesting from here to this high. You can see that we have our 61 level fib resting here in 1941. Okay, if I'll go to daily time frame, more interesting. Take this low. Okay, and why I'm not taking this low, because already we had a retracement almost around 60% of this move from here to here. Okay, now the retracement we are looking for is this move. You can see this was massive bullish move. Now the market is slowly, drop base drop, it is dropping, and it is giving its retracement in the 61 level. You can see that this is the fifth 61 level on daily time frame, which is also a demand area in 4-hour, plus this is a support. For now we have three confluences lined up, and let me drop down to 1-hour time frame first. Yeah, so this was the demand area, this was the fifth 61 level, and this is also the previous week low. Okay, this is the 1942 is the previous week low, and definitely I think market should tap this liquidity, definitely come to tap this liquidity and show some rejection in this level, okay, supply level. And we have I would say a fair value gap here as well. Okay, this is one area first. Okay, but this I think we'll catch it on later on. Okay, but for now I want the this I showed you three or four confluences for this demand area. Now let's see for the supply areas. Here you can see that there equal high has been created, this spike and this spike, so some sort of liquidity is resting over here. First thing. Second thing is, this is the super 1-hour time frame. This is the super supply area. Okay, that was the market sold off on Thursday. This is a super supply area, and definitely this is the first supply area. Okay, the supply area, the liquidity. Okay, another good position to sell gold from here, or maybe from here 1989, because you can see from the supply area, it was a supply area, or we can say a two candle retracement in 4-hour time frame. Also you can see that a lot of liquidity was resting above this area. 1 2 3 4 5 touches over here, and this liquidity has been swept. It touches the supply area, and we saw a very good sell from here. Okay, so I think again market will come to tap this supply again, and create some sort of equal high, or maybe break that equal high, and again we can see a good sell from here to 9 to maybe this area. And this is the first demand area, this is the second demand area, sorry, this is the first supply area, this is the second supply area, and this is the third supply area. The third, why I said, because in 4-hour time frame you can see this is a breaker block. Okay, this is a bearish breaker block for now. So I think this is a supply, market didn't react to the supply and broke it, so this is a bearish breaker block for now. And if I draw a fib from this high to this low, could you see that this is actual 50% retracement? Okay, this is the pure 50% retracement of this move. And second thing, the 61% is lying over here, this 1967 area. If I drop down to 1 hour time frame and I consider this low, okay, you can see that market has already rejected from this 51 level, and 61 is resting in this 65 area. So I would say that 65 to 67 area, this is a sort of very important for us for now. Okay, and also market is following a rising wedge. Okay, this is the end of this wedge. What I want on Monday opening is that I want market to this was the highs created on the Friday evening. I want on Monday opening to take this highs and to tap the 61 level and show some sort of rejection and to give a closing below this low, this 1960 low. Okay, and create a low, then we can enter from this some from fair value gap or some order block from here, and we can take our sell to maybe 1940. Why 1940? Because as I explained you, this is the previous week low. Okay, the liquidity must be swept for a bullish movement, and this is the very good supply area, demand area on the 4-hour time frame, as well as this is the support acting for now. Okay, this is the first scenario. The second scenario could be it can break this level and it can reach to this ultimate uh, supply area. Okay, and yeah, again we can see a sell off from here, and I'm targeting 1940 for the next week. Okay, for the sells I'll be targeting 1940, and for the buys, if I'll be not in favor of buy much because I don't know how the datas will be. That my decision will totally depend on the datas coming up. If the data is inflationary, definitely I'll look for sells. If it is deflationary, then we can look for buys. And for my buys, the target would be this 90, and from here as well I'll be looking for sells. Okay, 1940 area, 1935 area is my ultimate target. Why market can reach to 1990? Because here you can see this equal highs. Here you can see as well in 1 hour time frame, these the two equal highs. So definitely there are liquidity resting above on it. So this liquidity strip is must, and we have uh okay, we can create some sort of equal highs, or maybe uh, tap this supply area again, and we can see a sell off from here. So this is the my ultimate POV for next week, and from here, okay, market can, as I showed you on 4-hour time frame, we have a fair value gap, or you can say imbalance over here left, that is still untested. Then definitely market can reach to these areas, there is no doubt in that. And from here we can look for buys. Okay, and 2010 area, that is yeah, I'll explain you that itself, big deal. Here we can see that this fresh supply area. As of now, the market has not reached the supply area for a time frame. Okay, this is the very fresh supply area, and this was you know drop base, this is another base, this is supply, and as usual we can get ourselves from here as well. But I think this will be enough for next week, and if there is any changes and market has fulfilled this, okay, my point of view and my forecast, and there is, I think, if I feel there is something new in this market, some price actions gave us some new indication, then definitely I'll try to post another video on YouTube, and I'll try to come live on YouTube in this week. And because we have a lot of news coming up, it will be interesting to trade together and make money together from this market. So I think this will be enough for this week, guys. And as I keep on saying on the starting of this video, that most importantly, I focus on how not to lose money in this forex market. So I'll give you a tip. Okay, how not to lose money in this forex market. The hashtag one rule in this market is to use SL, stop loss. Keep your risk very tight. Should be 1 to 2% of your account, not more than that. And take not more than 3 to 4 trades a day. I would recommend 2 to 3 trades a day, because I know you won't stop at one trade a day. So I think 3 to 4 is enough for a day, and keep your loss limit to 1 to 2% of your account. And once you are done with the 1 to 2% loss, please call it a day, because that is not your day to make money on this market, and you are not lucky enough on the day. Okay, nothing can happen on this market, so leave it as usual, close it your laptop systems and go out, enjoy, come on the next day again and look for some good entries. And definitely I will post a video regarding all these stuffs. And that's all for today. Have a nice day ahead.